anyways. Yeah, paid a whole 23 bucks, but could be worse, right? All right, hey, me. I'm almost 100% better. Almost 100% better. I don't think I have pneumonia anymore, which is good. Well, without further ado, let's get going. It is Thursday, August 9, 2018. This is your daily Forex trading strategy session brought to you by the good people of. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is McDonell. I am the Chief FX Market Strategist for TradersWay. Been trading currencies for 15 years, something like that. It's a long time. I've learned a few things along the way. Life is a highway. I want to trade it all night long. I'm here to share the good, the bad, and the ugly with you. The hopes and the desire that you do become a better trader, not just successful and profitable, but maybe one day a professional trader. And if that happens, out of pure loyalty and respect for everything I've shared with you today and yesterday and tomorrow, you choose TradersWay as your foreign exchange broker. So please visit TradersWay.com and express your loyalty and respect there by opening an account. Okay. Okay, now share your desktop. Please confirm that you can see pretty colors representing price and time for some currency. I'll change the I'll put it so that there's a timestamp. Okay, good. Cool. All right, so let's go back in the world here, back in time. Okay. And I think we were here, what, 24 hours ago? About that, right? So we were talking about this particular scenario of doing technical analysis. There are only two trades going on here. And if I can get my drawing tool to work, let's try this one. This was an obvious sell. This was an obvious buy. What happens next? I have no idea. None. Well, I can guess. I could say, well, if I was a bear, this might be a sell in here, and that would be their target. The reasoning for the sell is not the pivot per se. It's you see this top, bottom, bottom. Okay. Now, I believe I've taught you price action, or you've taken the price action at fxbootcamp.com. You know that that's a simple role reversal. Okay. So you'd be thinking lower low, lower high, 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 lower low, that kind of thing. That's what a bear would be thinking. Doesn't mean they're right, doesn't mean that's what's happening, but you can rest assured that that's what they're trying to do. And this is their perceived top, by the way. Okay? So you can reverse that. What would be a bull thinking about? Well, a bull isn't as confident yet because they don't really have a true lower low, lower high scenario, or higher low, higher high. They don't have that yet. These guys did it faux show, right? So the bears are more confident, is all I'm pointing out. But a bear would say, well, I'm pretty confident that it's going to fall down and hit the M1, but if it bounces here, that's where I freak out. If it bounced here, not really desirable, but I wouldn't freak out quite yet. If it was down here, I'd be super happy, tickled pink. But this is worst case scenario for a bear. Okay, because that's the prime price that a bull would buy. A bull was begging for a bounce at 85. Begging. In fact, they were begging for 84, 84. So they got it, and no, there's not, but that still is a very good reason for bears to be concerned. If a bear is going to act to save the position that they traded here, or traded here, or traded here, then they need to trade here. It could have stayed below the monthly. That would have been great. That would have been fantastic. It could have gone a little higher and hit the weekly. That would have been great too. It just did somewhere in between off the roll reversal. So it's all good, man. So bears have to win on this if they're going down here. If all these bears lose, they're not very bearish at all, and the bulls win this game, and we're on our way up. Okay? So you need to make a decision. Calvin says 84, 88. That's ridiculous, Calvin. It's 84, 84. All right, 84, 88. You win. you have a persuasive argument. Okay, so anyways, there you go. Yeah. So off we go to the races. So which one is right? Wayne, why don't you just tell me? The heck, I don't know. If you, right? Right? This could be great. So which one is it? Is it the Bulls or the? That's why you need to pick a team before you start playing the game. I don't know which one that is. Is it bullish or is it bearish? I don't know. That's for you to decide, right? But does that make sense? Like if you pick one or the other, if you're a bull, you know what to do. If you're a bear, you know what to do. I'm hoping that that's where you are, or you can sense that that's there, because then all that's left is you have to decide, and you should have decided yesterday, last week, last month, whether you're a bull or a bear. And if you know if you're a bull or a bear, then it's simply one or the other, or neither. Does everyone get that? And I don't think there is anything else, but that's just my, I don't know, potential ignorance, right? Because I think if you're doing like smaller time frame stuff, you're shopping while you're hungry, and or you're doing something outside of the long term and you're only doing stuff on the short term, and which I think is weird. So like if I'm scalping, I still need to know this information, right? Isn't it an easier scalp if you had this in play? Like we talked about it, like, right? Remember, I said it's either going to go up here or going up here, right? Remember that? So like if I'm scalping, in fact, we did look at this on a 5-minute chart, didn't we? Wasn't it this one that went like this on a 5-minute? I'm like, yeah, but the thing is, you could have predicted yesterday that this was a potential buy. It was a buy because that was a potential buy, and therefore this was a buy, and this was a buy, right? I mean, like, so now you get into resistance. Should you be confident? Not yet, but you could have scalped the heck out of that for only 24 hours straight. The question is that really predictable? That even though this has been down, up, down, is it predictable that it would go up? What do you think? And then second part of that question, predictable that it would go up to about here somewhere. Okay? And then, is it predictable that if you are a bear and you drop into a 5-minute chart or a 15-minute chart, that you could be trying this? That's something you could be attempting right now. Is that reasonable? Is it probable? Is it plausible? Or is it completely made up nonsense? Yeah. But if you're a bear, like, what else would you be doing? Right? So, like, weekly swing traders, super easy stuff, right? Ridiculously super easy stuff if you're a weekly swing trader. This is your sell zone for the week. This is your target for the week. So if you're a bear, like, what else would you possibly be doing with your time if you're a bear? That's an obvious sell. That's obviously a lower low. It's going to make a lower high at a roll reversal. That's very basic price action, right? So your pivot set up the sell, the price action sets up the trigger, and the target is all down there at the bottom of the range anyways, right? Like, so with some basic knowledge of pivots and some basic knowledge of price action, I can't imagine what else you'd be doing if you were a bear. I'm sure there's a ton of other things you could be doing, but with this information, I mean, like, there must be a ton of other reasons why you'd be selling this if you were a bear. But with my simple childlike mind and the tools we use, like, if I was a bear, that I don't know what else there is, right? Any questions about that? Like, if you look at it and you don't see what I'm talking about, please let me know and we can talk about it. Stand up and be heard. I won't be another face in the crowd. You're gonna hear my voice as I shout it out loud. Yeah, my trade, it's now or never. Yeah, I ain't gonna trade forever. Yeah. All right. Where would I start learning about this? You could be here every day. You could use Google. You could probably try eBay, or you can go to fxbootcamp.com, where I teach you. I don't really care where you go, but in my humble opinion, you do need to know pivot points. I need pivot points. Let's say it that way. I need pivot points to trade. I need price action to trade. And do I need moving averages? No. Do I need my oscillators? No, not really. I guess fundamentals. All right, I need fundamental analysis. I need pivot points like daily, weekly, monthly, maybe even yearly. I don't know. I don't use yearly, but maybe I do. And I need price action. The fundamentals would be the bias, right? So those are the three things I have to have. So, for example, knowing that this was a place where bears would sell, I think would be significantly more difficult to predict without pivots. Maybe, and I can back out, maybe this is a top or some sort of high, or there might be other reasons. But again, with my simple childlike mind, that is a bearish area. I know the start of the week, like on Sunday, this was a sell. Okay. It could have been a buy if you were a bull. Okay, but look at, you would have been proven wrong fairly quickly and you would have lost money. But that's what happens when you're trading. Okay. But if you're a buyer, or sorry, if you were a seller, not a buyer, you would have got paid. Well, what's the difference? This was a good entry for a bull. Yeah, and this was a great entry for a bear. So what was the difference? The market picked a winner. That's what I'm saying. It's not you. You have nothing to do with this. Well, meaning the winner or loser part, right? You have to pick a team. But the market decides who gets paid, right? You're not big enough to influence the market. You're not on CNBC trying to influence the other, right? You and I, we're invisible. So who picks the winner and the loser? If all you can do is know a great place to buy, or all you can do is know a great place to sell, then all you can do is enter your trades properly, and then the market determines who makes money and who loses money. So you're a bull. It went up for 24 hours. Maybe along the course of 24 hours, you moved your stop to break even. And when it plopped through here, you didn't lose any money at all. Okay. The same thing with bears. Bears would have taken the short and then it collapsed. Great. But it's not you or I who determine these things, right? It is the way. It just is. Okay. And then, so that, anyway, so going back, if you're a bear, if you're a bear, yeah, this is your sell zone. Right on. I get it. Looks good. Right on. This is definitely a lower low. Okay. There's the old support. Price action now tells you, simple price action. It's like reciting the ABCs. I'm not talking about busting out calculus to figure this thing out, right? Simple price action. Okay. Now you can use Fibonacci and all that kind of stuff. You can throw in these pivots and all that. It also confirms, right? Pivot points tell you to sell here. Price action tells you to sell here. I'm sure you could fib this and get a fib reason to sell that here. Is there anything else? Probably this moving average crossover, if it keeps going lower, will confirm. So, for example, if I was using moving average crossovers, right, I'd say, okay, this is a potential sell because it's realigning after the cross. So I want to take the next 5-8 cross down, but I don't want to wait 15 hours for that, or I suppose it would have to be 12 hours or 16 hours for that. So I'll say, all right, I think it's happening now anyways on the 4-hour chart. So I'm going to drop into the 1-hour chart, take the next 5-8 cross. Oh my God, there's the 5-8 cross. Oh my gosh. So I should probably be selling momentarily somewhere in this area off the monthly central. All right, so that's cool. I'm right prime time in my zone. Good. So maybe I should drop down into a 15-minute chart now and see if I have an op here. You can see if I was trading a 15-minute chart, I would have had the double top 5-8 cross. Now we're kind of testing this bottom. So maybe it comes up, breaks, comes up, drops. And either here or here, I'm short. Based on my analysis of the of the 4-hour chart. So James says, looks like one opportunity per day to catch the trade. Well, that's on a 4-hour chart, right? So you do your analysis on the 4-hour chart. Those are weekly swings. So if I had taken either the bullish trade or the bearish trade on Monday, my plan would be to be in the trade till Thursday or Friday. Okay, there's my swing. But then I can drop into smaller time frames and say, well, what's going to happen over the next 12 hours, right? And all that. And what is the one op per day, bull or bearish op? What are those ops? You're analyzing the potential top and bottom of the market. Because one person's entry is another person's target, right? Bulls can't get in unless the bears are getting out. Or it's just very difficult, right? And vice versa. So, you know, when I'm looking at New York or I'm looking at London, let's say the London Open. I like to, if I'm trading the London Open, I'd like to be at my charts an hour and a half before the London Open, 1:30 a.m. New York time. So that means I'll probably actually be at my charts at 1, preparing for a trade somewhere between 1:30 and 2:30, because I'd prefer to front run. And if I was going to wait till 4 to take the trade, then I'm at 1. All right. So let's say it's 1 a.m. I'm analyzing my chart, 1 a.m. and I'm thinking somewhere between 1:30 and 2:30, I'm going to pull the trigger. Okay. What basic question am I actually asking? Well, first of all, I know the London session has the biggest move. So what I'm actually thinking, what is, you know, is this going to top in the next hour, hour and a half, in the next 90 minutes? Is it going to produce a, or is it going to produce a bottom? Well, if I was looking at this chart, would it be producing a bottom? Well, it'd be producing a bottom here, or it'd be producing a top here. But what's likely to happen, so let's say I take this 5A cross. I think it's going to be down until at least New York Open. I'm making a trade of the day. That's day trading. Don't need to get too far into the day trading if I'm going to do a course on it. But you see, it's mental. If this was London Open, I'm going to sell it and I'm going to stay short until New York. And I'm guessing it's going to produce at least 70% of the ADR. Because if I get this right, it's the top for the entire day. Well, what if I get it wrong? Then I picked the wrong team. Dang it! Yeah, no, I agree with you, Jimmy. Neat, right? It's mental. But you better analyze a higher time frame before you make decisions. All right. I don't want to live forever. I just want to live while I'm alive, 'cause it's my life. All right, look at this one go wrong. Holy schnicker schnocker. Well, it was a pretty good guess. Let's try to find out why I was wrong. Okay, this I thought was a target. Well, it was the low for the week. Cool. And then I thought this was a target. Okay. Now, if I were bullish on this pound dollar, I would have hoped to buy here. And we'd be up here by now. So let's go back to the, okay. Does it look bullish? It could have been. But does it look bullish here Monday? No. In this scenario, how do I teach you to swing? What do you use to sell? It's you're partially right. Shug, you're only partially right. What part are you missing? 4-hour 21 movement, EMA. Thank you. Yeah. So it still worked out. That's what happens when you have an overly bearish market. So let me go back on this 1-hour chart. The opportunity opens out of position, so you revert to the 4-hour 21 for decision-making process. And we're actually done for the week now, right? You should have stopped trading this yesterday. How many people agree that the 4-hour 21 is the guide that I teach in this scenario, and that we achieved the target yesterday, and I would have taught you to stop trading altogether? Take your profit and run. How many would raise their hand and say, aye? Yeah. Now, if you are a cheeky monkey, and you might be a cheeky monkey, you also have permission to consider a counter trend. I don't like counter trends, but they happen. So now, if you are a cheeky monkey and you just got to trade, this must be irresistible to you. Okay, once again, I don't recommend it, but it's plausible. So you have two choices in this situation. Yesterday, you could have taken the rest of the week off, right? Remember, I recommend that you become a docent at a local museum. I'm taking a class on managing endowments for museums. So maybe you could be the docent and I'll be the board advisor. What else do you do with your free time? I'm actually looking forward to that class. It's not till November, however. But cool, right? Managing endowments for the arts. What a cool thing to take at Harvard. Yeah, so I'll spend the whole weekend reviewing balance sheets and cash flow statements and investment strategies and portfolios. Very cool. So anyways, you can counter trend this, or you could have taken your profit right here and just be done. What did you do on Thursday? Golf. What did you do on Friday? Golf. What did you do on Saturday? Watch golf on TV. What did you do Sunday? Review my charts and set up trade plans. Cool, right? So if you are a bull, you have permission now on any time frame you want to basically look for this. Your real first challenge is going to be right there. And don't be confident that you're going to win that battle. So if you did buy a dip here on, like, let's say a 15-minute chart, okay, I'm not saying it's going to produce or even set up, but let's say it does. On a 15-minute chart, you take a shot somewhere down here. If I were me, I would take my profit right in there. Do not be confident that it's going up. Your ultimate target is here, but it might take us till Friday to get there. So what would that look like, you say? And I say, well, that's a fantastic question. Let's think about it. Up, down, long, up into here, probably down, and then breakout, pull back, and then something like that. What do you stink? Smell like a plant? Okay. Euro dollar. Is the market bullish or bearish? All right, so Hassan says, can we do euro dollar? Okay, there it is. What did we talk about days ago? Even weeks ago, we talked about this being a top and this being a bottom. It's already drawn and everything. Okay. What I did here, the reason I had it here, is it was a long swing trade up into here. So it dipped a little bit low, hit the actual support that I identified a week and a half or 2 weeks ago now. I think it was 2 weeks ago we identified this as support. So it's stretched out like an Arctic turtle, right? Hit it, and then we took off. So anyone that did buy down into here, their target's up there. And the cool thing is, I know they're in the trade because their stop was supposed to be up there. So now you can move your stop to break even or near break even. You can move it, let's say, to here at least. And you'll see if we're working our way back up. Now, my analysis tells me we either do it this week, which doesn't seem likely, or it's going to take a couple of weeks. Okay, that's the bullish point of view. A bear is going to say, oh man, we're taking this downtown. And this is rolling over. I shorted at the top. I feel super confident that we're going to break this bottom. And this is a reload right here, right now, right here. But again, I identified this level for you over a week ago, probably 2 weeks ago. So anyways, this could be like, boom, fire, sizzle, right in there. So you have to be an aggressive bear to take this. Aggressive on the 4 hour? Is that a good aggressive entry? Niet! Why not? We're pigs. Too late in the week, rejection of resistance. It's a simpler answer than that. And I think Mickey's got it, but because the 55 is in control. So what does the 55 predict? What does your technical analysis tell you about the near future? Expect a double bottom. Thank you. So that's what I'd be thinking if I were me. Oh, you get one of these kind of things. Okay, how is it in control? All right. Doop. Let me doop. Zoom in a little bit. Get my drawing tool. Down, 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 up to the 21 cell. Down, 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 back to the 21 cell. It's actually a 5, but down, 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 back, cell, down, 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 back. Gee whiz, my mouse is freaking out. Back to the moving averages. Okay. As long as you're below this 21, the 21 EMA is in control. Okay. So let's kind of do it again. Okay. Down, 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 back, sell. Down, 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 back, sell. Remember, this is 12 hours, guys. So this is like one day, the next day, the next day, the next day. Really complicated stuff, right? And then, uh-oh. Okay. By the way, it did this one day and then the next day, right? So there was a pretty clear sign something was going on here. But now that we're above the 21 is dead to me. Yeah, well, it's got to cross over. You go. Right? So now that this guy's control, it predicts this, and then like this, and then this, and then the moving averages are going to cross over each other here, and then it's going to pull back, hit the 21 again, and take off. Okay? That's a rollover with a J. So that's straight out of my textbook from 11 years ago. So like to draw the moving averages, this is going to do something like this over the near term. And then this is going to come. And price would do this. Okay. Oh, well, you were brilliant, Jay. Anyways, what you said was brilliant. I've noticed over the months that if price bounces off the 55 to make a double bottom. All right, so we're talking about this. Great. Trace to the 21 and make. Oh, well, I think I know what you're saying. You're saying this and then this and then this and then fail. There are reasons for that. Yeah, there are reasons for that. You got to be careful because you might put too much logic and thought into it, and right, this idea of like correlation and causation. It's more correlation than causation. It's not, the 21's not actually doing it. The reason the market's reversing is it's hitting obvious support, and either bears are getting out or bulls are getting in. Okay, that's what's really going on. There are many ways to do that. Okay, some people are going to take profit here on the sell because they're brilliant. Others are going to have the trailing stop loss and get hit, and they're less brilliant. And then others will want to buy. Well, what do they want to buy? They want to buy a Fibonacci retracement. So they're going to buy it here. And then other bears are going to try selling again, but their stops are close and they're up here. So they're basically scalpers. And there's all kinds of things going on here in between. These guys are trying to buy the retracement, and these guys are going to sell the top, and all this kind of stuff. The thing that's important was that we were at obvious support, and both bulls and bears have to go to work when you're at this support. So what you're saying is the 55 is in control, and it comes down and hits, right, and then tries again and hits the old 21 and maybe fails. Well, it's because bulls and bears are battling it out. And then it'll either go up here or it'll do this and go up there. Meanwhile, it's going to hit the old, man, this mouse is weird. It's going to come down and hit the old 21 a few times and then come back up. But it's not the 21 that's doing it. So that's one reason I say when you break the 21, it's dead, irrelevant. Right? In this case, selling at resistance is futile, irrelevant. So you could do this. Just get rid of it. It's done. It's not important anymore. So what's important? 55 suggests we have a bearish market that is slowly, that is slowing down, and the volume of bears is diminishing. Otherwise, they would have sold anyone. So that's dead to me. One then predicts a high probability of some sort of reversal. So as a bear, I have to at least temper my aggression. If when we were below the 21, I was bearish, I was confident, I was aggressive, I was selling every green candle. Now, whoa, 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 whoa. Temper your aggression. That's what it's telling me. Don't worry about the 21. It doesn't exist. It's not even relevant to the conversation, right? Get rid of it. So what is relevant? Well, as a bear, you should either think about taking profit or thinking about analyzing situation further, maybe on higher time frames, whether this is falling again or not. Or as a bull, you should be analyzing the scenario and maybe buying a fib using the pivots. If that doesn't work, look for a double bottom. But both bulls and bears need to be adjusting their trade plans in here. That's what's happening at the 21. Somebody needs to buy low. And everything else is just noise and probably pain. Okay? And the cause here is really, this is it. This is the big whammy. And I swear, a full week ago, we were up here talking about down here. I had this as a sell or this as a sell. Remember, I said one of two plans. If you're a bear, find the next two levels of resistance. You either sell here or you sell here. And if you do one of those, this is your target. Cool. Cool. So now that you're here, get the hell out. Take a profit. Okay. You bought the dip. You bought this? All right, let's talk about that. In this scenario, your stop has to be below support. Okay. Okay. Now, why didn't you buy this? Okay. Cool. So it doesn't look like we're getting the move, but the top of the market is still up here. So now you got to hope that it does this. Okay. Working its way up. Okay. And it's one of these things, like, it's such a mediocre market, the euro dollar, right? If you analyze that, it's such a mediocre market that if I got in a move, a bounce here, I would say, you know what? I would stay in it the rest of the year. Right? And the reason I say that is look at it this way. Where's the bottom of the market supposed to be? Price action, price action, price action, price action. Okay? Price action. Cool. Don't have to be a rocket surgeon. Not incredibly difficult. And then I look at this, and this is market action, right? That's the predicted low for August, this month. According to my research, this area is to be the low for the entire month. So if you got some sort of form of bouncing at that level, you might as well stay into about here for show. But we're coming into a period, which we've discussed. I think we might have an increase in volatility. I didn't expect it here. In fact, back here, I expected a decrease in volatility. So now, if we're buying it again, the same scenario, same price, same currency pair, but now I expect a different outcome. So on this one, I'm like, look, if I survive this, I might as well stay in it a long time, but this time, because of the increased volatility and volume of trading, we'll actually break it to the upside. Or what if I'm wrong? Comes down here and you lose a few pips and you just try again. You see what I mean? So I either lose a little bit or I gain a ton. Well, isn't that the game we're supposed to be in? That your entries are so good that you're either risking a little, that you are risking a little bit and you're gaining a whole lot. So going back to yesterday's conversation, if I got this trade, I don't want to make 300 pips. If I get that trade, I'm going to say, you know what? I get at least 1,000 out of this sucker. That's it. Because it's so good. It's so good that I either lose 30, or let's say 50. I either lose 50 and it's water off a duck's back, or I hit a grand slam and I win the game and I get the endorsement. Now I have to convince you it's the shoes. High flying, death defying 3D slam dunk. It's the shoes. What about commissions and swaps? So it will cost you, what do you pay? $2 a day? I don't know the size of your account. Don't even tell me. All right. You're going to pay $2 a day. I'm guessing. I don't know. On a standard lot. And you make $10,000 in pips. Let's say it takes you 3 months. So you'll make $10,000 profit, but it's going to cost you $200 in swap. Yeah, you're right. You probably shouldn't hold. Right. You're right. That $10,000 is going to cost you $200 in swap. Cost of doing business, my friend. I'd friend that all night long. Yeah. All right. Yeah. Once again, I'm trying to get some big ideas across in a small amount of time. Yeah, but what are you trading? Micros or minis? Yeah, so like, what does it cost you? A nickel? Couldn't even tell you. Probably a penny a day. Yeah. Did you ask TradersWay to double your account for you? Remember, if you call them up, you're like, hey, will you double my account for me? They'll do it. So in this case, instead of $500, you'd have $1,000 account. Yeah, just like, hey, you didn't take advantage of that? No, nobody with small accounts taking advantage of that? Well, of course it's a trap, Jay, because people that do it suck at trading. That's why they only have $500, right? So like, I suck at trading, so I'm only going to put $500 in this account. And then they blow it up, of course. It's not the broker. right? Just try not to suck. So what a lot of people do is they're like, all right, I have twice as well, put in a bigger trade. Once again, that's the dumb idea. It's not trader's way. It's when someone says, well, now I'll leverage up. Well, that's dumb, especially when you're not a good trade, right? When you're not a good trader. So what does a smart person do? Say, I'll still trade the little mini lots, but now I have twice as much room to breathe. So if it normally takes me 3 months to blow up my mini account, now I have 6 months in which I will blow up my trade account, or Wayne will teach me how to be a better trader, and somehow I'll survive that 6 months and get more than 6 months of experience and maybe even survive this thing. That's what a smart. Yeah, you know what I mean? So, yeah, so I wouldn't say it's a trap. I say someone that is determined to blow up their trading account will do it with 500 bucks, they'll do it with 5,000. Dude, I don't know the person directly, but I know and have seen the trading account of someone that can lose millions of dollars in a matter of days. I think it's no big deal. Like, dude, that's $17 million this week you threw away selling at support. Yeah. I've seen it. Like, you're selling at support? Are you retarded? He's like, what's 17 million? Like, what's the big deal? Like, a lot of people think 17 million is a big deal. It's like, no, well, I got hundreds. It's nothing. Yeah, okay, you got 300, 400, 500 million in the account. You're right. 17 million is nothing. But you should probably still not lose it. You know, like why don't you just give it to me if you don't care? Right? Would you have a thought like that? You're like, you're selling support. Just give it to me instead. You know, I'll buy you dinner and I'll take you for a ride in my Bugatti with your money. And it'll be better than you just giving it to the market, right? So anyways, it doesn't matter how much money you have. Stupid is as stupid does. So if you only have 500 bucks, I would say consider taking advantage of TradersWay offer. They'll double the account. Yes, there's leverage. Yes, there's going to be, you can't withdraw the free 500 bucks, right? But it gives you breathing room. And hopefully the breathing room allows you to survive a little bit longer so that you can get to be a better trader so that you can get to the next level. But you were supposed to do it when you open the account, so I don't know if they'll do it now. You might have to like just open a new account and switch it over. I don't know. But it's right on their website. If you want them to double your account, and I think it's only up to like 5K or something, they'll do it. You know, and up at MetaTraders, we bang it up to 25K. But anyways, can't be on the news trades. Okay. I didn't know that. It's not something I've taken advantage of. So you know, do your own research. I didn't know that, but I guess it makes sense because they're trying to protect you. You have to think about that. They're trying to help you, but helping you this way is a double. So if most traders blow up their trading account because they don't have a lot of money and they're greedy or they want to get rich quick, then they do silly things like PPI comes out and they put 50% of their cash on the trade. Well, that's a pretty dumb idea, right? Also, do you think TradersWay actually wants to lose their 500 bucks? So you have 500 bucks, they bump up your account to 1,000, and then you put this big thing on PPI, you put this big trade on. Well, then they're going to lose their 500 to do that either, right? So just Just don't be dumb, right? You know what I mean? Just have a 3-year plan. How many people do you think blow up their trading account on new scalps and over leveraged trades? How many do you think blow up their trading account and they have a 3-year plan on paper for their trading career? Yeah, right? None. So that's why I do things like tell you, go on a planning retreat. I've told you that probably 100 times this year. And then I'll say, it changed my life. It changed my trading career. It taught me amazing things that I still carry with me today. And then we can flip it and say, well, how many people do you think that blow up their trading account have a 3-year plan? None of them. So then create a 3-year trading plan. Go on a business planning retreat for yourself. Write a business plan, a mission statement, 3 years worth of cash flows. Identify your specific strategy and your rules of engagement. Think about your strengths and weaknesses. Have a plan for next week, next month, next year. Why? Because everybody else won't do it or are incapable of doing it. So be the 5% that do things like that. And maybe, just maybe, because you do the things that the 95% of others don't do, maybe that is the thing that helps you survive. Now, is it causation or is it correlation? Well, it might just be correlation. You can do all the right things and still blow up your trading account. But why don't you do all the right things and see what happens? And if you blow up your trading account, you know, I honestly did my best. But maybe, just maybe, you do all the right things and you survive. OMG. I think I'm having a sugar mode. I give you guys too much energy. You know, I soundproof my office because I yell and scream and sing all the time. Good idea, by the way. Yeah. All right. Any questions on how to do a 3-year cash flow statement? You're like, that sounds really good, but I don't have those skills, man. I have no idea what you're talking about. Anyone brave enough to say that? So, I looked at my trading history. I've told you this, I probably say this story every non-farm payroll, so I'll keep it short. Analyze my history. A lot of my trades I get lucky. I can put in a stupid trade and probably still make 10 pips. But analyzing thousands of my trades, I either made 10 pips or lost money, or I made more than, like, I made 30 or 40 or 50. But there was very rarely that I made sort of in between. So I analyzed all that. And so if I made 15 pips, I almost always made somewhere between 20 or 30, or 20 to 50. So I had this magic number of 15 pips. And I used to manage sales teams. And for my sales team called a minimal acceptable performance. Kind of like quota, but not for sales, but like dials made, pitches done, follow-ups done, contracts sent, contracts returned. and then of course cash in the bank. That's part of business planning, right? KRIs and KPIs and KRAs and cool. So I said, well, in trading, my minimal acceptable performance for any 15 pips. So I broke it down. I said, well, what if that was my average? Let's say on average, that means I got a bunch of winners worth more than 15 pips, but I have even more losers worth about 15 pips. So, and then I put it all through and all that kind of stuff, and somehow I average my minimal acceptable performance. I'm trying to get better, and I'm trying to improve my odds, and I'm trying to improve my stats, but on average, on the aggregate, I'm making 15 pips. So it turns out my MAP is my average. Now again, it's just numbers, right? So hopefully I'm better than MAP because I'm not trying to get MAP. It's sort of worst case scenario, but the law of averages gets me my average. 15 pips. So I use this and I say, what if I made 15 pips today and tomorrow, right? Monday, Tuesday, Wednesday, Thursday. Now, of course, I'm losing sometimes, but I'm doing much better than 15 pips a lot of the time. But it's an average from the aggregate. So after 1,000 trades, I'm making 15 pips a day. Winners, losers, and all that. Cool. So then I apply that to every single day for the next 3 years. So I literally broke it out on spreadsheet. Monday, Tuesday, Wednesday, Thursday, week 1, week 2, week 3, week 4, week 5, Monday, Tuesday, Wednesday, Thursday, Friday, 15 pips, 15 pips, 15 pips. And then from that, I can do some calculations. What is my account size? Because you can guess on a Euro USD, let's say every pip is either worth 10 cents or whatever. It works out really nice, right? Euro dollar. So I can do things like, what is my lot size relative to my account size? So I can start a starting balance on day 1, year 1, 10,000 bucks, let's say. And with 10,000 bucks, let's say I start trading mini lots. Mini lot is worth what? 10 cents? 10 cents. Great. And now, right, I'm making 15 pips a day. So I'm making $1.50 a day. Okay? And then I can create little ratios and stuff and say, well, when my account is 20,000, I'd be doing too many lots. Right? Actually, minis are $1, aren't they? Not 10 cents? They're $1, right? So I'm making $15 a day. Sorry, yeah. $15 a day, right? I'm doing my mini lot. But when it's 20,000, I can be doing too many lots. And you can even do the calculation if you're right. So what do you do when you're 12 or 15,000 or 20,000, whatever? But you break out the math. You can change the numbers. Well, what if you started with 25,000 instead of 10, or 5,000 instead of 10? And you can change the ratios. What if it's too many lots per $10,000? Okay, all this kind of stuff, because you could just tweak the spreadsheet and then you compile it every week for the year, and then you have a year-end balance, right? So now you know your account size and stuff. And once again, you can change your lot size and you can change your account size, and all this is just part of modeling to see where you're going and how the risk, right? And then you can do sort of like stress tests like they do with the central banks do with the banks, other banks. What if you go through a bad week? What if you go through a bad month? Okay, but then you could also do things like, what percentage do you pay yourself and what percentage do you give to your account size, to your account size, and then at what rate do you increase your lot size relative to your account size? So let's say you do grow your $10,000 account to a $20,000 account. What if you keep the ratio of lot size the same? So now you're doing too many lots and you're making twice as much money and the account's growing twice as fast. But what if you left it at 1 mini lot, but now your risk is cut in half? So you can play with all these scenarios. And what scenario do you do best at? And I played with all kinds of scenarios. And coming out of this business planning retreat, I found out really cool myself the first year, and I doubled the account. And then I paid myself 10% the second year, and then continued, right? And then I paid myself 20% the third year, 30%, 40, and then work your way up to 50%. Now you have like a 5-year plan or a 6-year plan. But the interesting thing is, if you focus on growing your account size significantly more than you consider paying yourself, which means by definition you are on the get rich slow, because you're still, even in year 4, trying to pay yourself as little as possible. But the thing is, you're growing your account size. Then by year 5 or year 6, let's say, you're paying yourself 1,000 times than if you had been paying yourself, let's say, half your profits in your first or second year. So if you pay yourself half your profits to yourself and the other half goes to your trading account, at the end of 5 years, you're driving a Honda Accord, probably pre-owned, but pre-owned certainly. But if you don't pay yourself anything your first year, pay yourself hardly anything your second year, pay yourself a little bit more your third year, so on and so forth, and instead put 100% and 90% and 80% of all your profits back into your trading account, so your account gets bigger and your lot size gets bigger. At the end of year 6, you're driving a Lamborghini, brand new, paid with cash, versus driving a 3-year-old certified pre-owned Honda. And the reason you're making quadrillion% more money is because you paid yourself less. So I came across several paradoxes like that. Several paradoxes. I had a paradigm shift. That was one of them. The less I paid myself, the more money I made. And I actually broke it down, like in particular year, I found that if I paid myself less per month, now I'm breaking it down, the less I paid myself per month, this is the interesting thing. At the end of the year, same year, I made more money. So let's say I paid myself $10,000 a month. At the end of the year, I made $120,000. But if I only paid myself, let's say $3,000 per month, it's not that I made 36, but the account size grew bigger, and you can get to the point where when you play with the numbers, you can make $200,000 a year instead of 120, paying yourself less. But your account size then grew that much more faster. So maybe it doesn't really work out mathematically in the first year. So maybe that year, instead of making 120, you didn't make 36, but let's say you made 72. But year 2, the second year of doing that, your account size grew so big because you were taking out so little that, instead of 120, it just took you longer. But I think you get the idea, right? All of this came from an Excel spreadsheet and a business planning retreat. So how could you possibly compete with somebody that goes to that length? But that's the trader you want to be, right? That's the trader you want to be. That's that prepared. But you know what that does for you mentally? Like, you want to be a confident trader. You want to be patient and disciplined. How could you be patient and disciplined if you don't have a 3-year plan? If you need to make money now, how could you possibly be patient and disciplined? I came out with this understanding that every individual day is irrelevant on the long run. As long as I stick to my long-term plan, the numbers take care of themselves. So all I need to do today is do my frickin' job. Am I a bull or a bear? Is the market bullish or bearish? If the market is bullish and I'm bullish, then I need to buy dips at support. Are we at support? Is this the right time? Let's drop into a small time frame. Yes, it's rolling over at obvious support, going in an uptrend, and I'm a bull. Buy it. Like, oh my God. It's not that hard, right? But you got to be patient and disciplined to say, oh, I'm bullish, but the market's today. And then tomorrow say, I'm bullish, but the market's not bullish today. And you might have to go a week or 2 or 3 sometimes. But when it lines up, you hit it, you crush it, you destroy it, and most of that profit, if not all of the profit, simply goes to your trading account, and you grow your assets under management, and you stay focused. And then when the market conditions change, you stop being aggressive. Because the cliche is you make a bunch of money and then you throw all your money away. But you're not a cliche. So when the market conditions are vibrant, your trading is vibrant. And when it dries up, your trading volume diminishes exponentially because you're patient and disciplined. And you know that there's an ebb and tide to everything. Right? You attack when you have an unfair advantage. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Have a happy Thursday. Trade safe. Thank you for being a client at TradersWay. And if you're interested in that boost to your account, just give them a call. I forget what the threshold is. I don't know if it's $500, 1,000, 5,000. I don't know. But it's on the website. Do the reading. Find out what the risk and reward is. If you can't find it, call up support. Tell them that Wayne sent you and you're interested, and you want to know what you need to do because you only have 1,000, but you want to conservatively trade 2,000. Jack up your leverage. You're not going to scalp news. You're not looking to get rich quick. In fact, you're on a 3-year plan. And you understand that the secret to success really turns out to be assets under management and how you can conservatively grow your trading account. So it could take you a year to conservatively double your account or a phone call. Either way, you need to be a conservative, disciplined trader. All right, see you guys tomorrow. Love you, babe. I have to jump.